Yo, 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 yo! What's going on in the hood? What's good, peoples? How's everybody doing? Hot damn. My friends, my people, welcome. It's Monday. It's Money Monday. I'm glad that, first of all, thank you for all joining as always. Geez, for the last 12 years, I'm always surprised how many people show up for these things. I appreciate it. We got a lot of things to talk about. This has been obviously a interesting and difficult year in the world and also in the stock market. It's been just wild, and we have a lot of stuff to talk about. You know, we have, number one, certain types of strategies that are working in this market, but also one thing that I'm seeing nonstop right now in the markets, and it's something I want to talk about today, is why the heck so many traders are so boom and bust. And if you know what I mean when I say boom and bust, what I mean by boom and bust is those moments where you make a bunch of money and then you give it back. You make a bunch of money and give it back. I've seen so many traders come into the market in the last year, even old students of mine that I haven't heard from in like 5, 6, 7 years, all coming back into the market because people are stuck at home due to the coronavirus. And with so many people stuck at home, obviously there's only a handful of things you can gravitate towards, especially if you like a little action, and trading stocks is one of them. But one thing that we're starting to see as we get a little bit more numbers from the last 6 months is that when the market is hot, like red hot, people are making money, and ignorance is bliss, and you can make so much money even if you're new by just getting a little bit lucky or just being in the right stocks at the right time. But when the market shifts, like we saw in the last 2 weeks, right, the market started to shift, all of a sudden, that boom boom scenario where, you know, even like your neighbor who's probably dumb as shit, right, is making money, all of a sudden that easy money is gone, and it requires a different skill set. And that's where the trading comes in. When you think about trading stocks, yes, in a go-go market, it's very, very easy during certain periods to make a little money. You can hold a stock and you're down on it, all of a sudden, you know, you can do a little double up, or you can do something a little bit weird, and before you know it, things go a little bit crazy. What happens is when the market shifts, all of a sudden, your techniques, your skill level, and the things that you do, they have to totally change. All of a sudden, you have to become a trader. So what we're going to talk about is what are some things you can do to gain some consistency in your trading. A lot of times, especially with just how people work, most times people think it's like a mental issue, like, oh, I'm getting really emotional in my trading. And that's actually not the case. The reason that people get really emotional in their trading is because they don't know what the heck they're doing all the time. So developing an edge, something that is enduring, that is statistical, that you can repeat over time, is really the best way to gain consistency. You know, as humans, we're all fucked up and we're all going to make mistakes. And, you know, every trader thinks that they need a psychologist to get better at it. And that's not necessarily the case. What happens with most traders is they don't have like 1 or 2 strategies that they can use on a consistent basis that they know the ins and outs of to the minute detail. And what I mean minute detail is that part of their strategy, say they have this pattern or that pattern, they know that pattern, they know that strategy from A to Z, but all the small nuances in it because they've taken the time to study it. When you have something like that, all of a sudden the emotional side of trading, that kind of commando side of things, like when you're in a trade and you're like, oh fuck, is this gonna work? Am I about to lose my shit? That goes away because you have something that's statistical, that is dynamic, that actually works, that you can make adjustments to, and you can read the markets to know when to use them. I think that's really the most important thing. So let's talk a little bit about what the heck we're going to talk about today. We'll go into a couple things that are working in this market. We'll take a look at the market, see what the heck is going on, and then from there, we'll dig into the nitty-gritty. And as always, feel free to ask any questions. I typically, because sometimes they come in too fast, I'll usually answer them at the end, as it just throws me off. But don't think I'm ignoring you. Just if you have any questions and I don't answer it, I apologize. Just ask it to me in the end, and I will 100%, even if it takes me till 1 in the morning, I'll make sure to get through all of them, I promise. So what the heck we're going to talk about today? What's the agenda? We're going to talk about how to gain consistency, all right? How to gain consistency. We all know the old trading adages, right? Which is like, oh, you have to have good reward to risk, and you have to hold your gains longer, keep your winners, losers tight. Sure, okay, I get that, right? But how do you actually do it? Like, how do you really do it? That part is not a mental part. It's usually a strategical part of having XYZ set rules, but understanding the nuances of the patterns you're trading so that you know exactly what needs to happen and then what to do after. It's more of using a checklist, and then once you memorize a checklist and you repeat it, you start to own it over time. We'll talk a little bit about what the heck is happening to traders right now. This year's been a little bit different than past years, as we have a lot more retail traders in the market. It's made the market more fun. It's definitely got us a lot more volatility as so many people are coming in. But you're also seeing, right, the kind of boom and bust cycle in a lot of different stocks, but also in a lot of different traders that I talk to, including even some of my own students. Like, sometimes you talk to people and they go gung-ho and they think they got it, and then, right, they lose track a little bit. So we'll talk a little bit about how the heck to not be part of that 95%, how to prevent account blowups, which I think is really the big thing. You can handle almost anything in trading. You can go on a bad streak, you can go on a win streak, whatever, it doesn't really matter. But the one thing that you can't survive is like those big drawdowns. I'm not even talking about like drawdowns where you lose your account in a day, but it's like, those periods where you lose 20%, 30% of your account. You're like, shit, I'm never going to make it back. So then you start to gamble, and you start to gamble a little more, and you're trying to get back to where you were, and it never happens. Once you reach a certain point in your account where you've lost, at that point it's all lost, because you start to break your rules even more and more. We're going to go over a little bit on how to just improve your consistency. What are some things that you can do every day that will get you where you need to go? Think about like trading like this. If you had an opportunity to make $30,000 in a week, and I'm just making up a number, right? But that $30,000, like 60,000 of it came in 2 days, and then you had 3 days of losses, big losses, right? 10,000, 10,000, 10,000. Or you can make $50,000 in a week, but you make $10,000 every single day without any stress. What would you choose? That's the consistency, right? For me, I like living my life the way I like to live it. So my goal is to try to make money every day. I may never get that monster cock home run, but I never have that loss that also ruins my next day or ruins my lunch. How to maximize risk to reward. And then we'll talk a little bit about how to actually let your winning trades run a little bit longer. So many of you guys probably, and I can only imagine because I spent a good chunk of the beginning of my career like this, how many of you guys skeet your trades? And what I mean by skeet, that's a 1990s term for letting it loose a little early. So what that means is, how many times you been in a hot trade and you just sold it because you had 20, 30 cents on it, and then it went bonkers? Right? We all do that. You sit there all day, wait for a trade. It's hot, it's caliente, it's beautiful. All of a sudden, you get it. You're in the perfect spot, and you see a little bit of green, and you sell it. And then all of a sudden, it goes bajonkers, right? It goes bajonkers. And then what? If you made $200 on a trade, is it a win if you could have made $2,000? No, it's not, right? There's an opportunity cost of it. So we'll talk a little bit about how to let your winners run, how to let them develop so that you can take the chunks that you need to cover your losses and also pad your accounts. Stick around to then. We'll talk about a little bit about what we do on the backside of things. I always have a little gift for everybody. Then we'll do a little Q&A. Slappy, where are you? What's going on? So who am I? I'm Kunal Desai. I'm the head janitor of this piece. I'm the owner of Bulls on Wall Street, Bulls on Crypto Street. I'm the mayor of Destin, Florida. I've been living here for the last few years. I've been trading stocks professionally for the last 10 years and unprofessionally for many years before because I stunk. I've been speaker all over the world. You name it. London, Japan. Any place you want to go, I've been there talking about my life's passion, which is trading stocks. I've taught tens of thousands of students how to trade stocks in my 60-day training boot camp, which is probably the longest trading course that's ever been invented. But it has to be like that because, frankly, if you try to learn how to trade stocks in less than 60 days, guess what? It's not going to work. If you think you're going to learn how to trade stocks from some DVDs, not going to work. First of all, nobody even sends you DVDs anymore, right? It's all online. You're going to learn how to do it from online tutorials, can't work. If you're going to learn how to trade from watching YouTube videos, it can't work. The only way it works is by having another crazy person sitting there yelling at you, encouraging you, loving you, showing you the nitty-gritty step-by-step of what needs to be done. This is what you do in the morning. This is what you do at 9 o'clock. This is what you do at 9:30. This is what you do at 10. This is what you do when you have a bad day. This is how you do these things. I teach live. My resume is in real time, always. I trade in front of my students live, show them how to do it so that they can marry the book knowledge with the real life trading knowledge. It's the only way to do it. Book knowledge is one book knowledge. Anybody ever read a trading book? I read 1,000 trading books. I haven't read 1,000, but I read a lot. Anybody ever learn how to trade from a trading book? No. A book is a book. How do you marry what's in a book to put money in your bank? Right? We have class, and then I trade in front of my guys in real time every single day, all day, so that they can take what's learned in the book and apply it to real life teaching. I use a momentum-based trading style that is, I think, the best way for retail people, small account people, people that are trading less than $1 million to grow. You can do dividends. You can do value investing. You can do IBD. You can do some faction of trend following, which is a big portion of what we do. But if you really want to grow, you have to trade momentum. Momentum stocks in every market, no matter where you are, bull market, bear market, sideways market, there's always a subset of stocks that have extreme heat. And those are the stocks that you guys always need to be in. You're only as good as the stocks you trade. So why do 95% of traders blow up their account? Number one, they got poor risk management. Especially when the market gets a little bit loose, most traders end up buying too many shares. the ranges start to increase, and you just end up getting stopped out. You end up chasing, you end up getting bigger losses. Most traders let their psychology of what's happening in their lives, personal, friends, family, girlfriend, boyfriend, both, all of a sudden start to impact their decisions in their trading, which is natural, but it's only natural because you actually don't have something that you can do with a blindfold on. So you start to wing it, right? You start to go commando a little bit on these things. And then, the main one is poor preparation. Just because you read a bunch of articles, right? You read the newspaper, that doesn't mean you're prepared for trading. How you actually prepare for trading, you have to go through stocks. I'm going to show you how to do that today. How you go through stocks to get it right. So most traders, they blow up their account because they don't know what the fuck they're doing. But more important than that, they do not have a strategy or routine that defines what they do. So let's talk about that. How the heck, right? How the heck do you go about that, right? So let's get into that. Let's get rid of all these damn slides, right? Let's get into a little nitty gritty. How the heck do you go through and do this? So these are charts. And if anybody's unfamiliar with charts and what the heck is going on here, just post it in the comments. My guy, Nick or Josh, they're both probably in here. They'll send you some beginner classes on charts. It's free. Don't worry about it. I will nickel and dime you. I only go for the big score. I'm just fucking with you. But no, they won't nickel and dime you. I got some free classes on just basic charting and stuff like that. But these are charts. All right. So how do you build an edge? What an edge is a strategy that you can depend on. This is why most people fail, right? Good. So how do you do that? Well, the first thing is this is one thing you should do every single day. So we're talking about just studying. We're talking about how the heck to build out a system of trading, right? If we're talking about how to build out a system of trading, the first thing that you probably should do every single week, you need to study what the heck is actually moving in the market. What are the biggest winners? What can I learn from that so that I can find the next ones? But more important than that, when you study the biggest winners, the biggest trenders in the market, what you will find is those are the stocks that actually keep going. And I do mostly day trading. I do swing trading too. When I talk about swing trading, I'm talking about mostly 3 to 8 to 9 day holds. So how do you know what the heck it is you're supposed to trade? What's the biggest heaters? Because that's what you got to be in. So you want to run a scanner. So this platform right here is called TC2000. It's an awesome platform. It's like $30 a month for the most part, and it's going to be the basis of everything that you need to do. You can use your broker, you can use FinViz, there's a trading view, so on and so forth, right? But one thing you need to be studying every single week is, what are the biggest winners? What are the biggest winners? What do they have in common? And from there, what you can start to see is, okay, these are XYZ type of patterns that may start to work. So what I do every single week, and this is the basis of how I start to build out strategy, how I start to build out an edge, is I study what are the biggest winners of the last 90 days. All right? The last 90 days. So what I want to do, I'll send you this scan right now. So this is an easy scan. You guys can just download this. It's pretty easy. This is something you should go through at least once a week. All right? And what I want to start to see is, when you start to see stocks on this list, what you'll start to see is that they tend to repeat themselves. And what happens with the trend is stocks that are in a trend tend to stay in a trend till a force greater than or equal to is thrust upon it. So every single Sunday, I'll go through the top 50 of these, looking for stocks that are in a big trend, that are either consolidating or sitting on some level of support where they could continue up. And that's a basis of what we do. Good. So what do you see here? So in here, like this is like a hot stock here, but we don't necessarily have any pattern, right? What I'm looking for is any stock that's got like a big level of consolidation. A big level of consolidation. Stocks get their power from consolidation. They get their power from the tightening of range. They get their power from compression. So what that essentially means is that anytime a stock runs, when it goes sideways for a period of time, it builds up energy, it builds up steam. So as it starts to do that, when it finally comes out of it, you can start a secondary run. So if you see something like this, like you're going through the 90-day momentum list, this is a very, very loose pattern. There's not anything you could do with it. Something like this is very tight. You've got a wide range. It gets tighter and tighter and tighter. This is pretty good. Hey, money. I got you, bro. I'm not sure who Ricky is. I'm not sure who Humble Trader is. But I'm sure they're beautiful people. Now, the tightness of range is what builds up steam. It's what builds up power. The tightness of range is what creates an explosion. Think of trading as a pressure cooker. When you get a range that tightens and tightens, what's happening is you're starting to build up energy so that when that range expands, when it finally comes out of it, you get an explosion. Anytime you want to break a certain level, anytime you want to break a certain level, you want to have at least three tests of resistance. Anytime, it doesn't matter if you're day trading, swing trading, long-term trade, you want 3 tests of resistance. Yeah, I can send you this overall layout. Hold up. You want 3 tests of resistance. Anytime, guys, I mark my words, anytime you want a break of resistance, you want 3 tests. When you get 3 tests and it breaks, a stock could go fucking nuts. Sorry for the swear. And we'll go back on this. So if we think about this, all right? 1 test, 2 tests, 3 tests. Easy enough, right? This is 3 tests will give you the most powerful breakout you can do. So like this is pen. Anybody been trading pen? When you got a level, 1 test, 2 tests, 3rd test, when it breaks, that's the most powerful type of way you can go. Anytime you want to do a breakout, if anybody's interested in breakout trading, doesn't matter if the line's going sideways, diagonal, up, down, don't matter. Up, down, all around. 1 test, 2 tests, 3 tests. What you want to be always, this is the key though, if it's actually going to go and hold. You want the 9 EMA, so I use a 200, 50, 20, and a 9 EMA. So these are simple moving averages, 9. If you want to do a breakout and actually time it right, if you want to do a breakout and time it right, guess what you got to do? Always 1 test, 2 tests, 3 tests, and guess what? 9 EMA curls for the girls. I use daily charts, but in general, you can do it on any time frame. All right? Whoa, Chinese, ching chongs. What's going on over there? The spam on YouTube is incredible. 1 test, 2 tests, 3 tests. 9 EMA curls for the girls. You need 9 EMA curls for the girls. So you want that 9 EMA. You will know if the breakout is ready if the 9 EMA comes right up under the kitchen. So you need 3 tests. All right? What's this one? We've all been all up in this one for the last couple weeks. Donkey Kong. Anybody play Donkey Kong? DraftKings? Is it a porn site? I don't even know. I'm just kidding. It's a gambling thing. So 1 test, 2 tests, 3 tests. See this 3rd test? See how like the 9 EMA is too loose? Anybody ever been in a breakout that fails? Anybody ever been in a breakout that fails? Like you buy a stock, the breakout looks hot, but it fails. Most traders, most teachers will tell you to draw a squiggly line on a chart, and they say if it goes over, you buy it. It's a lie. It's a lie and it does not work. It never has worked. What you need is tightness of range. You need the consolidation. You need that base. You need that marination station. So you got 1 test, 2 tests, 3 tests. So why didn't it break out here? See the 9 EMA is too loose. Your breakouts will fail 100, whether you're day trading or swing trading, does not matter. Your breakouts will fail if the 9 EMA is too loose. This happens in day trading too. We use the same strategy. We'll talk about it a little bit. The 9 EMA is too loose. Pattern ain't tight. And if it ain't tight, it ain't right. Always remember that. If it ain't tight, it ain't right. You want that 9 EMA coming up, curling up under the kitchen. If it's curling up under the kitchen, guess what? Then the range is marinating, is tightening. And the tightness of range is the key. For the last 100 years in the stock market, any study will tell you consolidation on trending names is what creates explosion. Trends beget more trends. Strength begets more strength. But you can't buy it blindly. That 9 EMA's got to come up, curls for the girls, coming up under the kitchen. So if it comes up here, like see it's like trying to break, well, 45 is the breakout, right? Or 44.50. But the 9 EMA is at $39. So if you bought 1,000 shares, your stop loss or your risk would be like $5,000, $6,000. That's not going to work, is it? No. You need that 9 EMA coming up, curls for the girl. So as it's starting to go sideways, 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 whoo! This thing is coming up under the kitchen, ain't it? Now you're in the shred zone. Now you can get something that's like a bigger push. And this is also the case for day trading too. This is the case for day trading too. I'll give you a firm example of this. Because I fucked this thing up so bad. Sorry for the swearing. So I was playing this Donkey Kong for a day trade today. It's a trending environment. It's a trender. So I want to be day trading this. I screwed this damn thing up so bad. I had thousands of shares of this thing. So the stock opened up really strong. So, yesterday or Friday, it closed about $53. At the open, it got up to $55.36, right? And then it started to fart around, and I ended up buying like in this candle over here, right? So I ended up buying like $55. And this trade was fucked from the beginning. Why? So I ended up buying like 55. The 9 EMA is at 53.90. Right? So this thing is like farting around, and I'm like, oh, fuck. Like it's, and I ended up selling it. And I had to sell it because like I had like 3,000 shares of this thing. Right? Like I don't want to get smoked out. So I end up selling it, and then what happens? It comes back into the 9, and it starts to go. But when it really started to pick up, So I didn't have 3 taps, did I? No 3 taps. So what ended up happening later on in the day, whether you're long-term trading or day trading, you need 3 taps. So like this stock, right? 1, 2. Now all of a sudden, look when it breaks. 1 tap, 2 tap, 3 taps of resistance. But what you start to see how you got 9 EMA curls for the girls coming up under the kitchen? Now, look, when I bought here, and I got a little excited, I'm not going to lie, I had my sister's wedding this weekend. I was getting a little loose. I was very excited to trade. Last 2 weeks have been like record weeks for me. I've been just shredded. So I was like very excited, probably a little bit hungover. Who knows? So I got a little bit early, too loose. But then look what happens. And you know what? I didn't even get back in this thing because I was like so annoyed with myself. So like 1 tap, 2 tap, 3 tap. Guys, it's always 3 taps, by the way. I know I scream a lot. I apologize. I get excited about trading. I love this. This is all I've been doing since I had literally fucking hair. 1 tap, 2 tap, 3 tap. So now, look, it rips at like 53.39. The 9 EMA is at $55. So you have 30 cents risk. 30 cents. Think about that. That's like, is that even 1%? I don't even know. I'm not a math magician, but very, very little risk. So it's a matter of always waiting for the right moment. Same thing. 3 taps, 9 EMA curls for the girls. That's your edge. If you're looking at a daily chart, a long-term chart, same thing. If you did 1 tap, 2 tap, 3 tap, but the 9 EMA is too loose, guess what? It's going to come back down. That's right. What you need is always curls for the girls, coming up under the kitchen, and when you do that, so like, for example, like today I was frankly a little bit annoyed with myself because I actually ended up taking like a loss on this thing for a few pennies. And then like I was farting around playing on my phone or whatever. And this thing ended up ripping. But that's the setup I need, right? So if I roll in like 3,000-4,000 shares here, well, yeah, now I got myself a good day. Does that make sense? 3 tests, you want 9 EMA, curls for the girls. That's how you build edge. So edge comes from what? Having strategies, but also having the ability. Hey, Rob, what's going on? How you doing, man? What's going on in Chi-Town? 1 test, 2 tests, 3 tests. That's the way to go. So let's talk back about finding stocks. Let's talk about back to finding stocks. So I want you guys to run a 90-day scan. I want you to run a 90-day scan. It's a top gainer scan of the last 90 days. This is very, very easy to do. You all can do this. All right? It's fantastic, okay? If you run a 90-day scan, not only are you going to find the best stocks to trade in, but they're going to be fantastic. They're great people, okay? I've had 5-star generals talking about the 90-day scan, and they will all tell you that it's the best, okay? Ivanka likes it. Eric likes it. They're fantastic people. They're my kids. You know that. So you got to run the 90-day scan. Always look at 1 test, 2 tests, 3 tests. Now, this is a strategy out of many. You want 3 tests of resistance. So when you see something like that, flag it. By the way, if you guys do not have a charting program where you can run scans, right? Run scans. You can't run a few basic things. You're going to have a lot of trouble getting better. Fuck, look at this thing. Right? Solar stocks have been hot all year. The purpose of this thing is to introduce you to the best momentum stocks so that you can find areas to shred them. All right? Find areas to shred them. That's all it is. All right? So what we need is Curls for the girls coming up under the kitchen. So like, see something like this, apps, it's not ready yet, right? It's not tight and right. It's going to need a little bit of work. But what you can start to see here is, hey, Robin, by the way, I did not know, Mr. Chopra, I didn't even know we were like half related. Something to watch. Woo! So you want to go through these. You want to go through these and look. You want to look. By the way, it's like, see something like this? You may not be ready exactly tomorrow. But you got 1 test, 2 tests, 3 tests. Now look, ideally this thing goes sideways for a couple days. Let's say 9 EMA come up, curls for the girls under the kitchen. You keep this SPWR on your watch list. Like, this is something that is imminent. I'm not in the prediction business, but in general, something like this, whew, that can get hot. That can get hot. That can get real hot. That can get real hot, by the way. 1 test, 2 tests, 3 tests. The 9 EMA is not under the kitchen, but in about 2 days, it should be about here, and it's going to be hot. All right? Keep that on the list. Woo. So what does this do? Like, what does this do? What's the purpose of this? We're only as good as the stocks that we trade. Sure. If you are the best trader in the world, so let me give you 2 scenarios. If you are the best trader in the world and you trade shitty stocks, or you're an average trader and you trade the best stocks, the average trader will make more money. The average trader will make more money because you're going to be in the right names. You're going to be in the trenders, the ones that can give you that juice that you need. Like, see this LBs, lubes, LB brands. What do you got here? Test. Whoa, my lines are not strong. What do you got here? Test. 9 EMAs coming up under the kitchen. Shit. That's hot, right? That is hot. That is something. So number 1, it's a number 24 on your 90-day momentum list. So it is one of the strongest stocks in the market. Hey, Alfredo, that could be true, but I got a handful of $1 million that says that's not. That's just me. Long-term investing may beat day trading, but I got a couple goodies that says it's not. It just depends on what you're good at, right? Hey, Mr. Gamers, I will. My boy Josh will get you some beginner videos. 1 test, 2 tests, 3 tests, 4 tests. By the way, all of you guys should have a software system. Yeah, Rocky and his brother Manoj Bhai, these are my boys. One, 2, 3, curls for the girls. I didn't even know that. Nirali told me. 1, 2, 3, boom. Flag that. That's hot. That thing breaks. What you think? Woo. Now this thing is heating up too. I got you, Mr. Gamers. See this? This is tight and right, ain't it? So you got a wide range. Tightening up, curling up under the kitchen. Stocks get their power from consolidation, from basis. When you get something that's trending and it has a period of rest, that resting phase builds up the power. Once you get this thing breakout, as long as that 9 EMAs come in curls over the girls under the kitchen, that's something that's got to go. This is a beautiful pattern, by the way. Like this, if it goes, like this thing's going to be a heater. Probably runs to 54, then 60, give or take. Flag it. That's something on the list too. 1 test, 2 tests, 3 tests. A couple people asked this. I have a dozen patterns that I trade, but in general, you know, the basis of all patterns are the same. 1 test, 2 tests, 3 tests, 4 tests. Needs about 1 more day. Let that 9 EMA come up, curling up in the kitchen tomorrow. Siggy Bear. Hot dang. Hot dang. That's hot. Woo! That's hot. Put that on your list. Put an alert. So what you want to do if you want to set an alert, all right? Right click. See this? Set an alert. So what's going to happen now? What's going to happen now is if it gets over that level, you'll get an alert. All right? And you got settings and stuff you can use. So like, you know, you can have pop-ups, sounds, whatever you need. If I could turn back time. So you can set it to whatever you want. I like a gong. Nice gong. That's just romantic, right? Nice gong, get you going. All right. So now this thing gets over here, and I flag him, I put him on a list. But if it gets over there, that's hot. That's something you want to buy. That's something you want to buy. You get 1 test, 2 tests, 3 tests. If you get curls for the girls coming up under the kitchen, shit, right? That's working. That's working in this market. This is number 35 out of all stocks in the U.S. stock market in terms of momentum. Momentum begets more momentum. Trends beget more trends. Power begets more power. Smarts begets more smarts. Stupid begets more stupid, right? That is the nature of the world. We are momentum people in general. What begets momentum ends up in more momentum. Does that make sense? ¿Comprendes? Good. That shit's hot. So that is one style of, you know, trading that we do. This is something that we're talking about. How do you build consistency? It's by having routines. It's by having an edge. So this is a part of my routine every single day. So to summarize, I run a 90-day scan for the stocks that have the most momentum for the last 90 days. I take out all the small cap pump and dumps because they're not going to probably keep trending for more than a handful of days. Small cap stocks in general, $1 to $5 stocks, you can make money on them. There's nothing wrong with them. We'll trade them once in a while. But they are meant to suck in people that have no money with promises of riches to take their money. That's the only thing it is for. If anybody has a small account and you think, okay, because I have a small account, I need to buy 1,000 shares of some small company to get in the game, that is not how you actually get in the game. Not a chance. That is how you lose it. That whole market, I used to trade all the time, trust me, our chat room in 2008, when I was, you know, a much wilder and younger man, we just trade small caps. Impossible. I was making money every day and then everybody else losing. Why? Because that's how the game is written. The person that actually is the leader, he'll make money. But nobody can follow along. They move too fast. They all die at some point. And nobody can gain any consistency. You know what's easier? You have 100 shares of like some $20, $30 stock, and it moves up $2-3. You get a couple $100. Then you do it again. You find some $20, $30, $40 stock, you buy 100 shares, you got a small account, it moves up $2-3 because it's moving around a lot, $3, $4, $5. That's how you make money. $200, $300, $400. The number of shares you buy has nothing to do with how much money you make. If you have 10 shares of $100 stock and it goes up 10%, how much do you make? $100. If you have 1,000 shares of a $1 stock and it goes up 10%, how much money do you make? $100. But guess what? That $1 stock most likely was bought by some chat room asshole that runs a group with 3,000-4,000 people's chat room that's designed to steal your money. He bought it way before. He's going to get you to buy it. It's going to spike up. He's going to sell it. His friends are going to sell it. His cousins are going to sell it. His mom's going to sell it. He's going to have 100,000 shares. It's going to pop up 10 cents. They're all going to sell it. You're going to buy it there because you're late. And guess what? Your $100,000 becomes $800. That's how it goes. It is a fact. I'm not lying. Even if I was lying, it is a fact. I've been in this business now for a long time. It is just a fact. Why else would some millionaire buy a $1 stock? Right? If the guy's the best trader in the history of the world, he's some bajillionaire, why is he buying $1 stock? Well, the reason you would do it is because you can get your people to pop it up and you can sell it to them. And they do it. And how they get you, they usually look like the nicest guy. They're usually ugly guys. That's the grift. I love a good grift. But that's the grift. They're usually ugly guys. They're usually ugly guys. That's how they get you. You're like, fuck, this guy looks like a normal guy. He's got glasses. I could trust him, right? He's ugly. He's got glasses. He farms. He's got tomatoes. Seems like a nice dude. Never works like that. There's another guy on Twitter. I used to follow him all the time. The fucker has acne. Right? Like he's like 18 years old. He got acne. I saw him at a conference and he was speaking. He's like, I turned like $500 into $4 million. No joke. He's like, fucking, what the fuck? That's one hell of a claim, right? And he's like, I did it in 200 days. The fucker had acne and braces. He had acne. Come on. So he does his speech, right? So like I came before him. Obviously, I brought down the house. He came in after me. He's like, oh, I turned $500 into $5 million in like 140 days. He's a kid. So they're like, oh, okay. What's your strategy? He's like, I turn on my trade ideas scanner and I run the gap scanner and, like the stocks show up on the scanner and, I buy them and like they go up and then I sell them. That was his fucking speech. I was cracking up like a motherfucker. I'm like, holy shit. Like, that was a presentation. His presentation, I turn on my scanner, there's things that show up and I buy it. God bless America. I love it. God bless America. Because this is the only country in the world you can do stuff like this. You can have acne, you can have braces. You can turn $500 into $5 million, but not even coherently explain what you do. I digress. I'm sorry I'm getting off on, a whole different tangent. All right, so this is 90-day, 3 taps. This is a swing trading technique that you can do for longer term trades. So this is a swing trading technique. So let's talk about this. There's 2 types of trading. Will Kerriman's fucking ugly too. There's no getting around that. I wasn't even talking about him, but he's ugly too. Good Lord, these people need some sun. Whatever happened to like the old school traders that just make some money, they want like some good looking women's, they buy boats, sports cars. Like those people don't even exist anymore. Now they all got like braces. They turn $500 into this and that. Whatever happened, just putting in some work so you can get a nice sports car, maybe a couple women's. All right, so there's 2 types of trading. I'm sorry, I'm digressing. Swing trading, which is you're holding stocks for 2 days to 14 days, maybe a little bit longer. All right. Now there's day trading. Day trading is you're holding it intraday, right? So it's from 9:30 a.m. to 4 p.m. All right. So when we talk about like some of what we just spoke about, right? So if you're swing trading, so let's go over the rules, right? So if you're swing trading, run your 90-day momentum scan. Once again, I'll send this to you guys. And you can replicate this, by the way. I mean, you don't have to have TC 2000. I digress because this is all I've used my whole career. You don't need this. You can replicate this somewhere else. Totally fine. All right? Run your 90-day momentum scan. So what the 90-day momentum scan is, stocks that are up the most the last 90 days with minimum 500,000 in volume. Wait for consolidations. Wait for a consolidation. After you run it through the scan, I want you to run through the top like 100 of them, right? Look at and flag any stock that's got a consolidation. 3 tabs. 3 tabs of resistance. I want you 9 EMA. Nine EMA curls for the girls. All right? Maybe smart money, but here I am still cooking and booking after all these years. 9 EMA curls for the girls. So now, that's a swing trading strategy. So let's talk about a day trading strategy that's been working like a charm in this market. So this is something that you're going to do for longer term trades. I'm going to write this down. I'm going to send this to you guys. A lot of Indian dentists. Oh, shit. I'm still the best looking man in the business. Now, day trading. Day trading 101. You need one pattern. Right? There's so many patterns to use. What's one pattern that's working in this market? What's one pattern that's working in this market? How does it go? What can you do? So now you have a swing trading strategy. Let's get into the day trading. So today we're going to talk about a V-wap sizzle pattern. All right? A V-wap sizzle pattern. V-wap sizzle pattern. So what is V-wap sizzle pattern? In my day trades, I use 3 indicators. A 9 EMA, a 20 EMA, and a V-wap. 9 EMA, 20 EMA, and a V-wap. You don't need much more, all right? Use volume, 9 EMA, 20 EMA, V-wap. That's it, all right? You don't got to do too much more. So let's talk about a sizzler. So what you want to do on a sizzler, all right? This is the easiest pattern. This is the easiest pattern you can learn. But guess what? You can make money on this. So we were just doing this today. So this is a V-wap sizzler pattern, all right? I'll give you the rules, and then we'll talk about it. So day trading 101, V-wap sizzle pattern. You want to scan for gaps in the morning. 3% or more. You want to scan for gaps in the morning, 3% or more. You can do that from your TC 2000. You can do that from websites. All right? So if you go, this is a free website. All right? Oh my God, right? It's a free website that fucking works. So if you go in, hit this Market Chameleon. I'm going to send you guys a link. In the morning, what you will see is all these stocks that are moving around pre-market. The stocks that are moving around pre-market, they will have some kind of news out usually in the morning. they're going to have some type of PR out, some type of news out, something that says, okay, it's ready to go. So what you want to do is put these bad boys on a list, all right? Put these bad boys on a list. So you got PLL, AMBO, so on and so forth, all right? PLL, AMBO, blah, 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 blah. Easy enough. Easy enough. Now, what you want to do is once these things actually go on, once they go on your list, all right? This is the easiest thing you can do. See this? This is 11 bucks. It gaps up to $40. You can't buy that, right? It's up to 300%. You can't chase it. You can't chase it. But it's a very, very simple pattern. And that's a $40 stock, so it's very tradable. You have a range. Once it opens up, you don't want to just buy it. Anybody that tells you when a stock has news out, if you buy it the first candle, if you buy it even in the first few minutes, then it's a pump and dump. You can't do it. You can't do it. You got to leave it alone. You got to let, what did we just learn about stocks? Stocks get their power from consolidation. They get their power from basing. You can't buy it right at the open. If you do, you will lose all your money. Say you bought a couple hundred shares of this. Before you know it, you lose. Oh, let me send that to you. I apologize. Hold on. My bad, Matt. This is a market chameleon. Boom. I'm sorry about that. Apologize. All right, so you can't buy the first candle. No, we never want to buy first candle. Anytime you buy any stock in the first candle, it is the luck of the draw. It is something that may work, may not work. You just can't do it. All right, you have to wait minimum 15 minutes or so for it to really marinate if it's going to set up. But the easiest pattern I found, and this thing works like a charm, is what we call a V-wap sizzler. All right, a V-wap sizzler. So stock pops up. It'll start to pull back. And usually this is going to happen like later on. It takes time to marinate, right? So we played this thing in the chat room. And by the way, you don't have to go in. You don't have to go in big size or anything like that. That's crazy, right? You don't want to do, you want to look for spots where there's minimal risk. Minimal risk. So let this thing marinate out, right? It's a marination station. So it's just pulling back, pulling back, pulling back. So this VWAP is your white line. It's the line in the sand on a stock. So what VWAP means is it means volume weighted average price. The easiest way to think about it is it's the average price of all the buyers and sellers that are trading in the market. And that's not 100% factually correct, but it's the easiest way to think about it. Volume weighted average price. So what that means is the average price of all the buyers and sellers weighted by volume in this particular name. So guess what? When you're above it, the stock tends to act bullish. When you're below it, it acts bearish. So the VWAP sizzle, we call it a sizzler, after the best steakhouse of the early 1990s, the Sizzler. If any of you guys from the Midwest, you'll know what I'm talking about. Oh yeah, we go into the Sizzler. We go into the Sizzler. Now granted, I'm Indian, so my parents don't eat beef, so we didn't really get to go to the Fizzler, but sometimes my parents, my friends' parents would take me, and it was a nice place. So this VWAP is the line in the sand. So the key is, as the stock starts to break back over the VWAP, and you don't want to just buy it if it breaks over the VWAP unless the 9 EMA is coming curling up under the kitchen. Let me reiterate. It will not work. Like say it broke over the VWAP here, it will not work. What you need is for it to break over the VWAP with the 9 EMA curls for the girls coming up under the kitchen. Then you will get your shot. Any other time, it will not work. So as it's coming, you need that 9 EMA coming up, curls for the girls, coming up for the kitchen. You can buy as it breaks over the V-wap, stop under the 9 EMA. Now you'll have yourself a low risk trade. You have yourself a low risk trade with maximum reward, and your target should be back towards the high of the day. So you can come in and risk like $1 and maybe you make 10. Now you don't want to hold this whole way, right? Scale out along the way. Use a little bit of smarts. But that's the easiest way to come in on the V-wap sizzler. That's a day trading strategy. What was it? Anybody remember this IPOB? This was like one of my best trades of last couple of weeks. Same thing. This is a V-wap sizzler, guys. All right? So this IPOB, this thing is awesome. This is probably a stock you want to keep on your list, by the way, long term. Real estate, real estate stocks, real estate investing, real estate, online real estate, anything is going to be huge in the next couple of years. If anybody bought a house in the last like 3-4 years, it's a fucking racket. Like I bought this place here like a few years ago. You go through some crusty real estate agent. She's got her grubby hands on you, showing you all the wrong places. She's got 3% on it, right? Then she's got a buddy that's like the seller, right? It's like her best friend. He's got 3% on it. You come to a deal. They barely give you any discount. So you got 6% out the door. Then they come and you put you're like, okay, you put an offer on the house, you get it. Then you go to the mortgage company, right? The mortgage company's got their dirty hands on you for 3-4%, right? At a fucking clip. And then you got to go to the titling company. They got their hands on you for, 1%. And then you got the originators and the auditors and the inspectors, right? Somebody's got to do a home inspection and termite inspection. Then you got the insurance company after you. So you try to just buy a nice home so you can do a little shredding, have a little bit of fun. You got like 18 people with their grubby hands on you trying to get in, get their cookies in. You're like, fuck, like this is like, like a normal place. Like, I got to deal with 18 people. So real estate investing probably, especially the online version where you cut out all these people, probably going to be a big thing over the next few years. If you really think about it, like, out of all the industries, right? Out of all the industries, the only one that hasn't been fully automated to the internets is really kind of like a lot of the real estate stuff, where you got to deal with like 50 people, right? Everybody's got their hands on it. You got the escrow company. I forgot about the escrow company. They all are awful. They all are awful. So this IPOB, they are a SPAC that they own, like a company called Open Door. There's a bunch of these. Zillow, so many of these are hot right now. So back to the V-wap setup. I apologize. So like this stock had some news out, right? So like this stock gapped up. So you go in on the Market Chameleon. Or you can also scan for gappers on TC2000. By the way, this is the best $30 you're going to spend. You got to spend some money on some tool. I'd rather spend $30-40 than like $200. At least you get nice colors and good layouts. So like this stock gaps up. Now, what you start to see here is like throughout the day, like it kind of pulls back. It's like sitting around, right? See right here? Like it actually breaks over the V-wap. It breaks over the V-wap right here. So why didn't it work? Why doesn't, like if it broke over the V-wap here, how come this thing didn't explode? Anybody know? Why did this not explode? Why? Anybody have an idea? Why did this not explode here? Come on, guys. Humor me. I'm old. I'm fat. I'm bald. I'm sensitive. 38 years young. Yeah, we're up. You're right. The 90, so this is at 1550, right? The 9 EMA still is 40 cents away on $15 stock. What's that, 3%? No marination station. You want the 9 EMA curling up too. Like, see how it's like really flat here? It's flat. You want that thing, man, you want the thing like cracking walnuts on a butt cheek, right? You want it so tight. You want it so tight. You want that thing to crack walnuts. This is too loose. Loosey-goosey, no fun, right? If it's tight and right, it's fun. If it's tight and right, it's very fun. So it's not going to work. All right. So this thing is just hanging. Now look at this. It pops over the V-wap again. Too loose. It's a no buenos. That's Spanish for no good. Now it pops over again. It's not tight. You should use this on all your trading, by the way. It doesn't matter the patterns. Doesn't matter what you're trying to do. Use it for all your trading. It's got to be tight and right. So this thing starts to push up, no buenos. Now look. Pops down. Tries to break through again. No, it ain't going to work. Now look what starts to happen. That was a little bit early. So finally, when it finally broke, and I was like, okay, it's only 10 cents away. At 10 cents, okay, think about it like this. This is how you want to do reward to risk. If it breaks here, and the 9 EMA is here, that's like 9 cents, okay? So if you bought 3,000 shares, and your risk is 9 cents, how many dollars is that? $270, right? That's a low risk trade. You can put some size in it. You can put some muscle in it because your risk is low. A lot of times people think, okay, if I buy a lot of shares, I have some size, then my risk for loss is high. No. A professional finds entries where they can buy a shitload of shares or as many shares as their account can handle, right, in relation to their risk management principles. But the pattern is so tight, the pattern has got so low risk that you can buy a whole shitload. But if you lose, guess what? If I lose on the trade, I stopped out on the 9 EMA, I lose $300 max. Is that going to ruin my day? Is that going to ruin my life? No. Because I know if this thing goes, first of all, the old high is at 1620, so that's your first target. So if I'm buying, I got 1620 potential target, and my risk is 10 cents, so I've got 70 cents potential for first target. It could go bajunkers, right? I got 70 cents first target, and I got 10 cents risk. Even if I bought 5,000 shares at 10 cents risk, it's only going to be $500. That's how you make money. You make money by finding asymmetric reward to risk scenarios. How can I risk a few to make a lot? That's the old adage of trading. And it's what you'll hear in every book. But it's not as easy as that because most people cannot find the proper entries because they do not have an edge. Reward to risk means nothing if you don't know how to get in and where. So you wait for the V-wap sizzle. Put the stop under the 9. It's got to be curling up under the kitchen, or otherwise it's not going to be worth it. And now you got yourself in a trade. Now look, this wasn't like some monster. I had to make like 1,000,000% on this. That's not what I do, right? Like I'm not into stocks that are just gonna make like 5,000 million% because they don't exist. They'll come around once in a while, sure, whatever. But that's not how it goes. All right? I know I got 10 cents risk and I'm thinking maybe I got 70 cents. Okay? Like for me, I bought 3,000 shares, I got 10 cent risk. That's how I, at least personally, I'm doing it. Okay, cool. If I win, I'll make a couple G's. If I lose, I'll lose $300. And I can do that. And then you know what? As this stock, like so I was like selling off into this. And then as this thing started to come, and you guys know this pattern because you just learned it, You got one test, two tests. Now look, you just learned this. If this broke here up over this high, could you buy it? I'm just asking a hypothetical. If it broke here, could you buy it? Could you buy it? It's a break of highs, isn't it? Isn't a break of highs like kind of something you learn in the trading books? Could you buy it? Come on, guys. You know I ain't leaving. I ain't leaving till you give me my answer. Two tests are for losers. If you remember one thing about me, just know that. Two tests are for losers. Two taps don't work. They never have. Because it's a double top, right? It's a double top. You cannot buy. What's the second reason if it broke here you couldn't do it? What would be the second reason? If it broke here, even if it broke, you couldn't do it. What would be the second reason? What's the second reason? The 9 EMA is too loose, right? You don't got curls for the girls. You don't got it coming up under the kitchen. And it's only two tests. So this thing had to come back. So now this thing is coming up, coming up, coming up, coming up, coming up. Now, when it finally breaks, look at where the 9 EMA is. So it breaks at 1635. Your 9 EMA is at 1617. And it's curling up. Right here is flat. You want it curling up. It's called curls for the girls for a reason. Think Daytona Beach, 1992. Curls for the girl. You want that 9 EMA coming up under the kitchen. Now, when he comes in, all right, you roll 1,000 shares, put a stop under, you got $200 risk. Now you're off to the races. That is how you day trade, guys. It's about having patterns and having set rules of entry so that you can get into momentum. And the key is momentum. How can I get into momentum? In low risk ways. And if you can do that, and you can do that over and over throughout the day, say you do that 2-3 times a day. That's how you go, right? That's how you go. That's day trading in a nutshell. And that's also swing trading in a nutshell. So those are the most important things that you can do. So like people, you know, when you want to make money, you have to treat this like a job. You got to treat this like a job. This is a great profession, but it's really no different than, you know, be a doctor, lawyer, accountant, teacher, whatever, right? A fireman. There's a certain level of education that comes in of knowing these patterns and then knowing the specific ways you want to get in and how to, right, actually get in without losing your shit. And then, of course, like once you have that knowledge, you still have to go out and do it. You got to practice it, right? You got to get practicing. Somebody's got to probably tweak some things. And then you practice it and then you tweak some things. And before you know, like you start to make some progress. And it's just like, you know, anything, like if you were like a toddler, right? And you're seeing things for the first time, over time, right? It just takes time to start to learn. Successful traders, they're resilient, they're tough, and they're accountable. They treat it like a business. If you go out into the trading day and you wake up in the morning and you think, holy cow, I'm going to just turn on these scanners and make money? No, you won't. I'm going to join a chat room and turn on their video and make money? No, you won't. I'm going to follow somebody else and do a trade and make money? No, you won't. It's your money. Always remember that. It's your money. It's your life. You follow some dude that you met on the internet and put your money into it? You can't, right? It's your money. Don't do it. Learn what you need to learn. And you can use other people for ideas, as like a scanner. Like I always tell my guys, like I trade in front of my guys live. I'm on screen share. It's telling people what I buy and sell. But look at my fingers. See these things? See how long they are? How skinny they are? Nobody moves a mouse as fast as me. All right? This is like my life. This is what I do every day, all day, since I can remember. Who can move that fast? Well, I can move that fast because they're my ideas, right? But like if you're going to follow along, no. And I actually trade regular stocks. I'm trading like stuff like, Zoom and like GoPro and Roku and whatever, right? Like I'm trading regular companies for the most part. And even then, it's still hard. It's still hard. So you want to really, treat it like a business. You try doing this as a business. You're not following people blindly. That's where you really got to go with this. Learn the risk management. If you have curls for the girls, then your risk on an individual trade is going to be pretty low. So don't be afraid to just take a loss. All right? Don't be afraid to take a loss. For the most part, I would say, I have so many days where I have just as many losses as winners in particular names. But when I hit one or two, like they pay the bills, right? If I'm losing, think about it like this. If you're, say you got a trade. You got a trade going. So you got a trade. Use 10 cents on one. Then you lose 10 cents. And then you hit $1. You're still up 80 cents. That's where you want to go. You want to get yourself to the point where your entries are so perfect that if you lose, you don't care. And that's really important because, sometimes we always think like, okay, trading's so mental, emotional. Well, it is when you're losing more money on a trade than you feel comfortable, right? Or that feels like your account can't handle it. So you want to put yourself in those low-risk situations where you can get in a trade, you got curls for the girls, and if it does not work, you just don't care because it's just part of the game. And that's where you got to really go with this. Accountability, all right? In trading, because you're sitting alone in your room, or in your bedroom, office, wherever, sometimes you're a lone ranger. One of the best things you can do, whether it's getting a mentor like me or somebody else, but get yourself at least a trading buddy. Some kind of accountability partner. I trade by a guy, his name is Zaman. His name is Saeed. I've only met him one time. Think about this. He's like my best friend too. I only met him one time. For 13 years, I met him on Twitter in 2008. For 12 years, almost going on 13, we've been trading side by side on GChat, Gmail chat, this whole time. I only met him one time. He's my best friend. I met him on Twitter. He traded the same style as me. I hit him up like, hey, I got this chat room. Do you want to help out? I don't pay him or anything. He's like, yeah, sure. And we sit on GChat every day. And when I'm over trading, and I still do, I make more mistakes in any day than I do good things. But the good things I do are awesome, and the mistakes I make are small. Right? Hopefully that's like being a parent, right? So I make more mistakes than all. But having a trading buddy, he'll tell me all the time, it's 1 o'clock, bail, go to the beach, go drive around, go get a car wash, because he'll know I'm over trading or I'm getting a little excited. He's like, hey man, the day's over, because he's maybe seeing the market objectively and I'm overly excited, and vice versa, right? I'm doing the same thing for him. Accountability buddy is huge. And for some of you guys that are my students already, so many of you guys are in here. Any city you're in, I'll be able to name you a few traders I can introduce you to. You can be in Paducah, Kansas. I know 2 guys there. You can be in Kansas City, Kansas, or Kansas City, Missouri. I know 2 people there. Wherever you are, Cleveland, Columbus, New York, it doesn't matter. We got enough people in our community. Pair you up. Accountability buddy will help. And then, of course, developing a business plan. So I showed you 2 strategies today. They're not the best strategies in the history of the world or anything like that, but they're 2 solid strategies that I use every day. But in terms of your business plan, you want to walk into, right, a bank and ask for a loan to build a restaurant without a business plan. So why would you put, $10,000 or $15,000, $20,000, $5,000, $50,000, whatever, into a trading account and just start hitting buttons? You can't. You can't if you want to be serious, right? This is a serious game, and there are people that have been doing this a long time whose sole job is to take people's money that don't know what they're doing. So you want to build out a business plan. What kind of setups am I going to trade? What are my risk management principles? Do I got curls for the girls? What am I going to do if I'm in a slump? What am I going to do with my money? How am I going to handle my taxes? That's the whole ball game. That is the whole ball game. So now you got to act. Shorten your learning curve. When I teach people, I have a 60-day course. The reason is that there's a lot to learn. None of it is complicated, but in the end, this is a big money business if you do it right. And just like any big money business, there's stress, and there's a little education, and there's a lot of learning. And you got to do it that way because, frankly, that's the only way to do it. So when you want to really think about, just how the heck you want to learn, in terms of my class, I do 28 classes over 60 days, live like this. As you can probably tell, I actually like teaching class. I go in every day and I put the shred on because it's just what I do. I'm a teacher by nature. I'm a trader by nature. Very few people like to do both. Most traders are nerds, right? Most traders are nerds. But I do like teaching. It's just something I've always done since 2008. We are coming up on, so I think this might be the 49th or 50th boot camp. Let me see here. We're coming up on like maybe the 50th boot camp we've ever done. 50-day boot camp. Each one's 60 days. That's 3,000 days I've been teaching. Damn, man. Time flies. Oh, we're in boot camp 49. So yeah, the next one will be boot camp 50. I teach live, but everything I do is recorded and archived on a back end. So every class you can think of, it's all there. And even the past boot camps, everything is all there on one page. So even though if you can't make live class, and I really do suggest you make live class. If you can't make live class, that's all right. Everything is recorded, archived, and you have lifetime access. My guys like Danny and some of these guys, they've been with me for they've been with me for years and years and years. My guys can keep taking boot camp as many times they want. I want them to because it's a lifetime journey. Shoot, I'm going to be 40 soon and I'm still learning stuff. Every class is recorded. It's archived. We have questions, Q&A sessions, quizzes, and homework. We do market recaps. I recap trades. So we have classes where we recap the trades. We put our students on trading simulators. So I've got layouts made. I got layouts made for trading simulators. So you can come in while you're in class and start hitting buttons. You can come in on class, start hitting buttons, and start learning strategies. Right? Start learning strategies. That's going to be really important. We work on trade plans. And then, of course, we have an awesome community. We use Discord. We got a Discord room. And I trade in front of, the other thing is, and the main thing, I trade in front of my guys live every day. Every day. Like, you never see me. I traveled the whole world, had all sorts of fun, and I'm still always trading in front of my guys. It's a wedding, it's a funeral, whatever it is. You catch me trading, at least for those first few hours, if not a little bit longer. How you marry book knowledge to real life knowledge is by having somebody trade live. And not like sitting there like, hey, I buy and I sell 2 seconds later, right? But like going in and showing people how to develop a day. How do you develop a day? And that's going to be really important. And of course, we got a 200-page course book of everything that, I know about trading. It's all in here. So you get that. And then, of course, I have a chat room for swing trading and day trading. Guys, we teach both equally. So it's not just day trading. We also teach swing trading. You need to learn both. Day trading is not scalable on its own. You got IRAs, 401ks, right? You have retirement accounts you want to build for wealth. Then you need to be doing some longer term trades. You can't just sit there and day trade for, 30, 40, 50 cents, 80 cents. There are times you have to make trades where you get a double or a triple. You just have to, right? So you guys get access to our chat room, swing trading, day trading, both. We do all sorts of guest webinars. So taxes, I got it handled. Trade journaling, got it handled. Anything that you think of, I've got it handled. If you've got any questions on bootcamp, you want to talk to me about it or one of my business partners, just put in, hey, I'm interested. My guy will send you a link or something. You can set up a call with me. We'll get it going. So let's open this thing up to some questions. And yes, we have payment plans and kind of all that fun stuff. If any of you guys, like if you want to come into class, but you're like, fuck, I'm laid off of work or something, I'll work around it. We start class in 10 days. This will be Bootcamp 50. You can imagine I'm getting pretty good at doing these. Every bootcamp's a little bit different, a little bit better as I'm just growing as a teacher over the last 10 years also. My guy's phone number, Omar, he's in here. If you want to just give him a buzz or you want to chat about something, you can feel free to just, text him or whatever too. We'll get it going. If you want to get in, we'll figure a way to get you guys in. Let's open this thing up to some questions. And by the way, if you ever want to just text me or something like that, that's my celly. That's my email. You guys can go in and hit me up on the Twitter or whatever I did. I got you, Lance. You know what I do. Yes, everything is in the evening, Vaughn. So I teach class at 8 p.m. Eastern Time. Always. Hey, James, so simple moving average and exponential moving average, the difference is just how they're calculated. An exponential moving average is front-weighted, where a simple moving average is equal-weighted, and that actually means a big load of shit. The reason I use 1 exponential and 3 simple is just that I found it works better, but it's like nothing scientific. I wish I did, where I was like, oh, okay, I have this, that's like, okay, I got a 47% win rate on the strategy that I back-tested, but it's not really like that. I found the 9 EMA just works better, and it does. Good. Hey, Beto, I appreciate that. Brother. Yes, feel free to reach out to me anytime you want. You can send me a text. That's my cell. Remember, if you can't get a hold of your mentor on his cell, he is not your mentor. He's a vendor. That's just the case. If you're ever going to buy a class from anybody, you can't get a hold of the actual man, then guess what? His business is not actually teaching people. Good. Joe Polichinchio? You know it. Mr. Aragon, how are you, sir? Good. Hey, Pain to Gain. Bootcamp 22, man. Woo. I had hair on the Bootcamp 22. Anybody else got any questions? Speak now or forever hold your peace. Middle East. That's a 1987 term. I think Madonna started it. You know what's going on. Mr. Crockett, I appreciate you guys. You guys have my email. You got my number. You want to chat, you let me know. What's going on? I love you guys. Peace.